There's a whole lot to say about the Chinese ecosystems, and here like 10 things highlighted. Once, we've got multiple closed-loop systems. So each of these conglomerates, when you look at Alibaba, you look at Tencent, you look at Ping An, are their own closed-loop system. And that means both from a financial services, from a financial supply chain perspective, are self-sufficient. We've seen kind of the payment functions, the wealth management function, the lending, the insurance, etc. But they also combine the offline and the online world. So you can actually, and when we say it's closed kind of across these two dimensions. And again, as you mentioned earlier, they had to build it this way because the infrastructure, the banking infrastructure was not keeping up with how the country overall developed. So either you build it yourself, you couldn't rely on anybody else. And the one thing that happened that facilitated this is that for the most part the regulators stood back and allowed them to do this up to now. That changes a little bit. So the second point is that only in March this year, a new clearinghouse for third-party payments was announced, and that actually has a large ownership by the third-party payment provider. So it's a privately owned infrastructure versus kind of the old world between the central bank and the large commercial banks. That clearinghouse is largely state-owned and state-governed. So one thing that happened is you actually get to the centralization, and centralization to a certain extent means control. With control there will be more regulation and kind of this relatively uninhibited growth. I wouldn't say it comes to an end, but you can see over the coming years that the players that benefited from having all the information at their fingertips might now need to share some of that through the new infrastructure. But so some of the benefits that they were enjoying might decrease, and kind of the disadvantage that the classic players have might go the other way around. I always like the number comparisons. I realize it's like I'm inundating you with numbers, but this new clearinghouse is scaled to 120,000 transactions per second on average. We scale it to 180,000 on peak. Visa, MasterCard, Amex run typically at an 80,000 transaction per second peak. So the scaling for about twice as many transactions. And that requires technology that the state and the government quite honestly didn't have. And so the reason that this infrastructure is owned privately, people think, is that actually the regulator was relying on these fintech companies, if I can still call them that, to bring in the technology to build this new clearinghouse. So we'll take a look in the graph later, but typically the progression in advanced economies is you go from cash to credit cards to cashless, basically. And here you've got the replacement of both the cash and bank cards at the same time, which is very interesting. The growth for Alibaba and Tencent with WeChat now comes not only from China, they're going abroad, and the first avenue for growth that they get is Chinese tourists abroad, of which we have quite many in this country as well. Right? And so you can actually pay with Alipay or WeChat Pay in 28 countries these days. It's been a wave. Got a slide later on that as well in terms of the investment and the functionality that gets pushed out. It's kind of a wave that comes like from Southeast Asia, and it's coming northward a bit. We'll see whether it crosses the Sea of Japan. Number 5, QR codes are what makes the whole system tick in China, and in the Western world, they've never really taken off. Now, because they're so common in China, actually, like 2 or 3 months ago, a consortium that includes Visa, Amex, MasterCard actually has adopted it as one of the global standards that they support. So it's kind of coming back. If you actually go to China and you go out at night, you see all these street vendors. Many of the street vendors have the QR code, right? So you buy your ramen or whatever, grilled grasshoppers in that case, and you pay with Alipay. So you hold up your phone against the QR code, and you pay your whatever 5 renminbi grasshoppers on your phone. There's no more cash that changes hands. Comparisons are interesting. One of the drivers here for the adoption of these third-party payments is that we have an incredibly high penetration of debit cards in China, and very few credit cards. And I'll show you an interesting graph in a moment, so keep that thought. If you look at the whole third-party payment space, about 50% of that is consumer to consumer, and that's where WeChat, so Tencent is quite dominant. That's the red packets, for example, that they're getting exchanged. So if you look at it from a commercial perspective, where can you actually generate income from this whole thing? The consumer-to-consumer space is not that interesting because, for the most part, that service is free, right? So you exchange the packets, and there's no revenue generated. The money really comes from the consumer payments, B2C, so I pay for products and services, and that's about 16% of the market. So if you look at it, how profitable these companies can be, it's kind of the slice of the 16% that they're taking. However, the fees that are being charged in China on these cards is much lower. So if I use my US PayPal account, I pay something like 2.9% and I think 30 cents base or so on a transaction. Here they charge at the maximum 60 basis points, so very attractive terms. The margin they generate is 0.1 to 0.4%. So again, the payment function itself is not necessarily the big money spinner for them. It's the entry to get the users onto the platform and then generate value through the ecosystem. So the comparison, the margin that PayPal generates is 1.8%. But 1.2 percentage points of those 1.8% goes out for sales and marketing and customer acquisition. Right? So if you look at this, essentially what these players have done, they've taken out this 1.2% of customer acquisition, and then we're at the level playing field. So they have created the incentives to get on the platform, to play with a much lower customer acquisition cost. The last thing is, although it's been, I would say, hands-off regulated, there are about 250 licenses in China in the third-party payment space. Only 120 of those are allowing you to do online payments, right? Which is what you ultimately want to do. And since now the physical players have moved into the space, like Gourmet, for example, it's like the the wide apparel makers, so for washing machine, laundry machines, etc. They're trying to get into the space because they realize that's the first step for the customer acquisition. There's only about 20 to 30, 40 licenses that are actually considered to be in play. So it becomes a very small market in a way and hard to access if you're coming late to the game right